Hello, my name is Augustine Antonu. I'm a senior consultant analyst to a private wealth fund, and I work for London School of Business and Finance as the program director for the MSc Finance course. I'd like to welcome you to this series of videos recorded for the corporate finance. There are 10 videos. The 10 videos are a tool and a journey. As you embark on every one of them, you need to take time to reflect on what are the desired learning outcomes that you intend to achieve from this video. When you finish watching the video, then you can go to the panel of experts debrief and review the case studies. After that, have a look at my MBA and do the readings around. I assure you that at the end of the 10 series of videos, you will have become at least an expert in corporate finance. And then maybe you're ready to put it into practice or write an examination, depending on why you took on this course. This is the introductory lecture, and the title of the lecture is Introduction to Corporate Finance. We'll start with a quote. If ignorance paid dividends, most people will make a fortune out of what they do not know about corporate finance. What do you know about corporate finance? Let me tell you a little bit. Corporate finance is about 3 key decisions that span any organization. We're talking about financing decision in terms of do we use equity or debt in our capital structure. We're talking about investing decisions in terms of do we invest in buying assets or do we lease the assets. We're talking about managerial decisions in terms of pricing, risk management, how much dividend do we pay, day-to-day operational needs of the organization. It is all about the finance of any company, just the finance. But this key word, finance, transcends every facet of any organization. When I say facet here, let's have a review. If I determine that the strategy of my firm is that of being a low-cost leader, then I need to have my pricing strategy fit in there. Otherwise, I will have a lack of fit. How do I do that? I need to design an operation that will give me volume and capacity so that I can price low. Corporate finance sits right there. Let's look at the main question of the day. And mind you, for every topic we look at of the 10 videos, you're going to have one key question. The question here is this: how do you show me the money? Every stakeholder in the organization is interested in the money, no matter what they claim. Who is a stakeholder? A stakeholder is anyone who can affect an organization or can be affected by the organization as the organization seeks to meet its aim. And that aim is maximization of shareholder wealth. So, tell me which stakeholder does not seek to see the money. The environmentalist? Well, you have to spend money to keep the environment intact. Employees, they need to be paid. Suppliers, they need to be paid. Government, the taxes. Shareholders, returns. And very importantly, the super directors and their super bonus. What outcomes are we looking for here? We're looking for outcomes in terms of understanding and insight. So for understanding, we're looking at the importance of corporate finance as a tool for maximization of shareholder wealth. And then we look at insight. The insight is for you to recognize the impact of good corporate finance decisions on an organization. So, good best practice corporate finance decisions in terms of financing decisions so that shareholder wealth is maximized. A certain mix of debt and equity would be optimal to the value of an organization, as you will see in the weighted average cost of capital and in portfolio management. Investing decision. What type of assets do we invest in? How do we evaluate the assets so that we make the right decision in order to maximize shareholder wealth? Certain investing decisions have destroyed shareholder wealth. And when that happens, the shareholders will retaliate by voting with their feet, selling their shares, thereby suppressing the share price until the company goes bust. Managerial decisions, day-to-day managerial decisions, which although may not be strategic, although they are essentially operational, if there's a flaw, a failure in those day-to-day managerial decisions for finance, it may lead to a strategic failure. So, what is corporate finance? What is the rationale for corporate finance? It is to give managers the ability to use information and the resources, create a synergy between these two in order to maximize shareholder wealth. It is a primary aim of any organization. How does this happen? Take this journey with me. There is a company there, in the middle. So many questions face a financial manager on a daily, monthly, and yearly basis. It is their dilemma. How can you raise money for your start-up firm? That's a financing decision in the first place. Should your firm launch a new product? That is an investing decision. Which supplier should your firm choose? That is a managerial decision. Should your firm produce a part or outsource production? That is an investing decision. Should your firm issue new equity or stock or borrow the money? That is a financing decision. These are not exhaustive. They are not an exhaustive list of what financial managers face on a daily basis, but there are some of them. Let's review them further. It says, financial manager, deal with this. Excuse me if I'm a little bit dramatic, but this is what they deal with on a daily basis. There is the financing decision, the investing decision, and the managerial decision. The sidebar there says, is this the right order? Which comes first? Is it the financing decision or the investing decision? Does the firm say, oh, I need to raise 50% of equity, 50% of debt in order to fund this project? Will Shell, Royal Shell Dutch PLC, say, our joint project with Cosan PLC, let's do 50% equity or 50% debt? Or do we say we have the investing opportunity and then let's raise the finance? That is the question. Which comes first? Is it the hen or the egg? Have a think about that. In practice, what is acceptable? Approach the financial director of your organization and ask them this question. What decision do you make first? Do you decide this is the financial structure I'm going to follow and then look for the investment opportunity? Or do you look for the investment opportunity and determine the financial structure? Or do you run both sequentially? Let's look further. We take a detour here. We look at the statement of financial position and extract, and we look at the statement of comprehensive income. I just told you that corporate finance is about financing decision, investing decision, and managerial decision. Then let's look at how it goes. We have assets, and we have equals to, well, that's not written there, but the accounting equation says assets equals to liabilities plus equity. Because all assets are funded by either liability or equity. It doesn't matter what you call it. Ordinary shares, share A, share B, senior rated A shares, preference shares, bonds, 10-year bonds, whatever you call them, it's either equity or liability to fund an asset. So our non-current assets and our current assets are funded by non-current liabilities, current liabilities, and everything we call equity. So we have the financing decision on the left-hand side of the balance sheet. Well, on the right-hand side of the balance sheet, if you're looking at the videos, and we have the investing decision on the left-hand side of the balance sheet if you're looking at the videos. What does the statement of comprehensive income do for us? It is where managerial decision reflects profits which are then used to service both liabilities and equity. Do you see the work of corporate finance? No? Well, come closer. Let's look again. We'll start with the investing decision. Let's break it down. The investing decision is fundamentally what will shape the firm and whether it will create or add value to its owners, for its owners. Because from the investing decision, we invest in assets for the long term that will generate returns for the organization. It is where we decide which quality of assets we can use to satisfy our shareholders. The financial manager weighs the cost and benefits of each project and determines what is suitable to the organization. Then we'll break it down further and say, what is the financing decision? The financial manager must decide whether to raise more money from the new and or existing shareholders, investors. Do we sell more equity or do we issue debt? Which one is more beneficial to the organization? Then we'll break it down further and look at the managerial decision, which is a set of series of daily operational actions. The financial manager must ensure that the firm has enough cash in hand. That's where cash budgeting comes in. They must ensure that the cash operating cycle is short, not too long, so that people don't do business with their money. Some organizations actually seek to make business with other people's money. How much working capital do we need? How much risk can we expose ourselves to? How do we manage the risk? How do we eliminate the downside of any risk and maintain the upside? You look at this in risk management in more detail. As such, why does the financial manager do this? Why don't they just sit and do nothing? Let's look closer again. There's the investing decision plus the financing decision plus the managerial decision, which leads to maximization of shareholder wealth. Then we work on every single bit of it. For the next 10 video series, you're going to work on every single bit of this. You're going to be working on areas which are financing decision. So I'm going to give you an example of financing decision. The capital structure. The capital structure, the cost of capital, the weighted average cost of capital, it's a financing decision. When you look at the time value of money, the investment appraisal method, you're looking at investing decisions. When you look at portfolio management, portfolio theory, you're looking at risk management, you're looking at working capital, you're looking at managerial decisions. So we have 9 other videos that will encapsulate all these corporate finance decisions keyed in 3 areas of financing, investing, and managerial decision over the next 9 videos. You will see how this is reflected in reality through the case studies you'll be provided with. The case studies and learning chunks provide a set of interaction and synergy over the next 9 topics. Are you ready to take off? Are you ready to explore the world of corporate finance? Well, if you are, I am. Let's go. And I'll see you in the next set of lectures. Have a nice day. Thank you.